Hey folks, Dan Frio here with your closing bell for September 11th, 2024. So we saw the 30-year kind of take a plunge today. Is that going to continue? Well, it's going to be based on tomorrow's economic news. What's that news going to consist of? Well, let's get over to the economic calendar. Here's what we had so far today. We had the CPI numbers coming in, and the year-over-year number went from 2.9 to 2.5. That was fantastic news. Now the news continues through tomorrow. We have initial jobless claims coming in. This is going to be a market mover, as well as producer inflation right through this area through here. So that's what the data we're going to get tomorrow before the opening bell. But there was some news out today and some headlines from CNBC, and I'm going to show you this right here. Here's a group of economists that start talking about what's the Federal Reserve going to do? Are they going to cut rates a half, a quarter? What are they going to do? But before this video, there was a take before it. And I got access to that filming, and I found it on another website. And Rick Santelli and the guests here, they kind of get into it. So I'm going to show you that here. And then when we come back, I'm going to give you this video and show you kind of break down the data that they're going to show us is, what the thought is from the Federal Reserve. So let's take it away.
For homes, do you think that's why prices have increased? Government policies, that's the problem. That's what the moderators, they never drill down. Young people, I feel so sorry for you. Really, I do. There's an economic dishonesty going on here.
Let me just ask then, since we're on the topic, Rick, how you feel about tariffs?
You know how I feel about tariffs? It's a bargaining chip. And many of the tariffs with China are still on. Once again, the moderators don't drill down on the two aspects of tariffs, but they do drill down on other areas that make no economic sense whatsoever.
But you don't think the tariffs raise prices? Just as a mathematical economic...
Listen, prices are going up no matter what, Andrew. Whether you do it on the tax side, whether you do it on the tariff side, our policies are silly. We can't be Santa Claus. All those programs aren't policies, they're promises that never get by Congress, and each one of them has a cost we can't afford because we've done this before. When you prepay and you make policies that don't make economic sense, you may think you're getting a benefit. Look at what we learned yesterday. Finally, wages reach 2019, but it doesn't reflect how much they've gone up since 2019. If you're out there and you're a young person, study up. Study up. All these superstars that made recommendations in such a timely fashion yesterday, maybe they don't feel the pain of what's going on, but I feel bad that they can't buy houses and insurance. You think these prices of insurance are going to go down, Andrew? You think people in Florida that could barely hold on to their homes could afford 300% increases in their insurance?
There is no question about that. It's a very true statement.
Right, so why don't we talk about it? Why don't we talk about it?
Well, then there's other issues around climate issues and other things that are affecting things in Florida.
What issues did you learn last night?
It's a longer conversation,
Rick. The Vice President's smart and she could memorize that Trump takes the bait, but the ABC people were like a turkey shoot.
Rick, we're going to continue the conversation right now about CPI. I want to get everybody's take on what we're just hearing as it relates to
Okay, so now can you see Rick Santelli's just going to sit up there and basically not say anything because him and the host, as you notice, they just kind of got into it. But they just pick it up from right here with this context. So let's see what everybody else has to say about the news or the CPI print for today. So take it away.
About CPI, I want to get everybody's take on what we're just hearing as it relates to this inflation data. Tiffany Weiling is the economist at PIMCO. Emily Rowland is the co-chief investment strategist at John Hancock Investment Management. Of course, our own Steve Leisman is here. Steve, I want to start with you and get your reaction to the number and maybe get inside the mind of the Fed as it's looking at this number this morning.
Okay, so what I want you also to take the context is this was from this morning, the opening bell. Here's where the equity markets were. A complete reversal, basically. So I'll show you that at the latter part of this video.
Well, I'll do that sequentially. Food was a goose egg. Energy down 0.8. I think we're going to get more of that given what's happened to the price of oil over the past month.
Did he say oil? So basically what he's saying is oil prices are basically plummeting. So we're going to have core inflation. The one number that was up just a tad up through here, if you look at the core inflation, went from 0.2 to 0.3. Well, if you strip out where oil was, because that's what they do here, they stripped out food and energy, oil's helping, actually tremendously helping the inflation numbers right now. So that's why he mentioned oil. So let's take it back to him.
Interesting. Used cars down 1%. We thought they might level off here. New cars up at zero. Owner's equivalent rent we can't get any help from. It's really quite a mystery. Up 0.5 again. This is the proxy that they use for housing costs. It doesn't seem to come down. I keep reading anecdotal reports about lower prices throughout the country, specifically places like Texas, places like Florida, and it's not showing up in the index. I don't know why. It continues to be expected to show up. One other thing was medical care services down 0.1%. There's an expectation that this is going to be coming back, and it had been down. Airline fares up 3.9%. I want to take a second to talk about this. There's a residual seasonality problem, or because the pandemic saw airline fares rise each summer, there's an expectation now that they'll continue to rise. The pandemic has messed up a lot of data, especially the seasonality aspect of it, the seasonal adjustments. We're going to be living with this for a while. Not sure how much airline fares have gone up. They tend to go down with energy. Real quickly then, as Rick pointed out, you have had a rise in yields. That shows up in the expectation for the Fed. So what's happened right now is that, and I think this is right, there was one chance, a small chance, that this data might favor a 50 basis point rate increase. It did not. If it was substantially lower, substantially below expectations, there was a chance it might favor 50. It does not. So what happened is you've had an increase in the probability of a 25 from 71 to 85%. And I expect with the PPI tomorrow, if it comes in around expectations, it'll lock in at 25 for next week.
Thank you, Steve. Tiffany, what was your reaction and take on all this?
Yeah, so I agree. I think this is probably, this is a 25 basis point rate cut in September. It takes away some of the urgency that the markets were discussing around a 50. I think ultimately, though, the Fed probably had made up his mind. I don't think that the labor market report that we got a few weeks ago was weak enough for them to go. It wasn't great, but it wasn't weak enough for them to go 50. I think more likely what happens in September is they announce 25, but they make it very clear that they're going to do a sequence of rate cuts because relative to their own monetary policy rules, they look a little bit behind a curve. So they can, there's a range of possible outcomes here where it's appropriate for them to be cutting. So I think that's really the message that they're going to send.
Emily, your reaction and what you think the Fed may do?
Yeah, this was a good report. In fact, this was the fourth consecutive good report we got after three bad ones to start the year. You know, the shelter component here is a little bit worrisome. It's been responsible for 70% of the gains in CPI over the last several months. So the housing market's just been very stubborn here. But overall, the Fed's going to be a lot more focused on the labor market. I agree with Tiffany. Last month's job report wasn't great. The revisions were terrible. Job openings are at the lowest level since 2021. We're hearing respondents in surveys telling us that jobs are hard to find. And then we heard from Powell at Jackson Hole that the Fed does not welcome any more cooling in the labor market. So we think that the focus here shifts away from inflation towards the labor market. It's going to be 25 basis points in September. Bond market's loading up the rest of the year, 50 basis points expected in November, 50 in December. We think that's a little bit too aggressive here, given that inflation and shelter still have not come down.
Well,
so I'm going to have to agree with most of the stuff, but one of the areas that I want to show you guys is where the inflation's coming from. So you have auto insurance, rent, housing, and so forth. So here's where it's, you got insurance is just killing everybody right now. Okay, just killing everybody right now. It's going up exponentially, and that's hurting. So, but here's where basically everything is in the inflation front. You go down through here, so things are starting to really come down now. You might not feel it right now, but eventually you're going to start feeling that component of it. They said she was saying about the CME FedWatch tool. The Fed, is going to come start cutting substantially. They're going to cut. So this is telling us basically there's an 80% chance in December that the federal funds rate will be 4.25 to 4.5. That'd be a 1% adjustment from where we are today, because the federal funds rate right now is 5.25 to 5.5. So it would be the sell rate here that would be focused in on. So let's get over to the broad markets. Here's what I'm saying. There was a complete reversal in the equity markets. You had over through here, if we look at this chart, let's go back to where they were. Hold on, this might mess
Rick,
up
we're
just
going
a
to
tad,
continue the...
but I want to show you guys where the markets were when they were talking about it. So here's where the markets were. Negative 265 on the Dow Jones. Complete reversal. Now it's up 126. So that's a 300, almost a 400 point reversal. The Nasdaq's up 360. S&P's up 50 points. The VIX is down. That's telling me that the anxiety on Wall Street's coming down. This is all. I love all these numbers right through here. Let's see cryptocurrency. Oh man, it's down. But let's check oil. Oil is probably up a little bit. Yeah, oil's up a little bit, but it's still down below $70 a barrel. So that's what we're seeing right through here. That's the broad markets that we're looking at right now. So overall, it's basically good inflationary numbers just came in. So tomorrow we're going to be focused on the jobs report number 1, and then on the PPI number 2. So I'll be back tomorrow morning letting you guys know how those numbers came out, where the markets reacted to that. So things are going good right now. If you're in the market right now, I go over rates on a daily basis. So these are the top 6 rates people use when they're buying their first house. I'd like to give you the context of where these rates, what establishes these rates? Whose rates are they? How do you get these? And so forth. So these programs right here that you're seeing, these 3 programs, are Mortgage News Daily. They do a fantastic job. They survey lenders all over the country, and they ask them these 5 questions. And then what the lenders do is they respond back with these rates. Okay, the 5 questions are: if you had somebody buying their first house, it was a single-family home, and they were gonna live there. It's basically their first single-family home that they're gonna move into. Okay, that's the first piece of this equation. The other piece is right through here. These people are putting down 25% because they have a loan-to-value of 75, and they have a 780 credit score. Okay, so that's what the rate would be if that's you. If that's not you, what would your rate be? Or if you're looking to refinance, what would your rate be? Well, those are hard to come by because there's a whole bunch of adjustments that need to be made to figure out what exactly that rate would be. So we would love to help you navigate to see, is it a good time for you to buy? Is it a good time for you to refinance? How can you use equity in your house to either maybe pay off bills or buy that other property? Maybe you need a reverse mortgage. I'd love to help you with all those things. We also work with a lot of investors on the DSCR programs that we have. So if you don't know about those programs, check out my other videos. Just look at DSCR, the #1 investment loan out there for investors. It's really simple to get into, and it's basically the talk of the town right now if you're buying your first investment property or multiple investment properties. So how do you reach out to me to get some assistance, and can I help you? Well, yes, I can help you. I'm licensed in all 50 states as well as Puerto Rico, so there's no reason why you shouldn't reach out to me for some assistance. And here's my website. It's the rateupdate.com. So I work at ServBank. That means I'm licensed all over the country because we're a federal bank, but we're also one of the country's largest mortgage brokers. I want you guys to know that. So just check out the website right through here. If you're looking to buy that first house, you got to check out and see if there's any grants available for you right up through there. If you want me to review your loan estimate to see if you're getting a good deal, so once you're locked in and everything's good, send me your loan estimate to let me know, so I can do an analysis to see, what you're getting. Is it good in the market right now, or can it be beat? Can we beat it, get me a lower rate, maybe lower fees? Reach out to us. We'd love to help. So how do you do that? Well, if you're looking to buy your first house, you can click the Apply Now button, or you can just scroll down to the bottom of our website right through here, and you'll find out our 800 as well as my email address. So 800 number is 844-775-5626, or you can email me directly at dan@therateupdate.com. So thanks so much for watching, guys. God bless. I hope you enjoyed this week's videos, and I hope you even enjoyed today's live event. We had a lot of people there today, so that channel is growing and growing and growing. So that's it for today, guys. I'll be back tomorrow with fresh data and a fresh report. See you then.